The inflation outlook in South Africa remains positive, while the rand has gained around 3% against the US dollar this year.
The inflationary prospects are still quite positive even going forward, mainly because the rand has been firm. Food prices are set to see a sharp slowdown in the rate of increase in the wake of the good rains that we have had. And thirdly, Eskom has been granted an increase in electricity tariffs of only 2.2% this year.
But the Reserve Bank governor cautioned recently that it's premature to expect rate cuts as the economic environment remains unpredictable. The president's recent cabinet reshuffle has increased political uncertainty. 2 rating downgrades followed the sudden appointment of a new finance minister. Ratings agency Moody's is still deliberating and may also downgrade South Africa. And with the US Fed preparing for another possible rate hike this year, the domestic trajectory could change very quickly.
It has changed the outlook for interest rates completely. It's a lot more complicated right now. The rand is very volatile compared to late March when it was really gaining ground. So at the moment, we do not see any room for interest rate cuts.
Another downgrade could see capital outflows of about $10 billion.
At the moment, the global environment is still favorable towards emerging market assets. The rand has benefited from that. Even our bonds, we've seen them remaining very steady. But if the situation changes, the rand could easily come under further pressure. We could see outflows of capital.
With the drought over and food inflation easing, South Africans were hoping for some relief. A rate cut could also help stimulate this weak economy. But ongoing uncertainty locally and internationally is most likely to keep the Reserve Bank opting again to remain on the safer side with no changes to the repo rate. Sumitra Nydoo, CGTN, Johannesburg, South Africa.